Hi, welcome back to Academic Market Insights. I'm Dr. Russell Rhodes, and I'm joined by Dr. Larissa Adamiec. Back in the day, before we became doctors and ended up in the academic world, we both did work within the financial industry, and it's not. At times it can be a difficult place to work. As we're sitting here in early 2025, some of the big investment banks have already announced some layoffs. The federal government's announced some layoffs as well. So I think there are a lot of people that are kind of nervous about their jobs out there. We're going to talk about, and Dr. A is going to do the heavy lifting today, but I definitely will chime in a few times because I've got enough experience that I got let go. I've worked with people. I worked with people that got let go for different reasons and given them advice that led to better severance, et cetera. So we're going to talk about all of those things. So with that, I'm handing it off to you. Go.
And welcome to our Academic Market Insights. If you like this video, please press like. We're very thankful that you've joined us. This came about because we were discussing this with some of our graduate students who are now transitioning from graduation to the investment industry. And this is, as Dr. Rowe was discussing, a reality of working in the financial markets, that these things happen and they happen dramatically and they happen big. And they usually happen all at once. So you'll start to hear rumblings of one investment bank. Well, it won't take that long before another investment bank will start similar rumblings, and so on and so on. And it's usually a challenging time because then if all the banks are letting people go, finding a job at another bank becomes that much more difficult. And so we'll talk about some of those things as we work through this. And on a very personal note, particularly for any students that are watching this, if a layoff does happen, it most likely has nothing to do with you. Um, and this is most likely going to be something that's going to, as Dr. Rose said, lead to bigger and better things for you. Gives you an opportunity to pivot and really examine, what do you want to do? I had a girlfriend in 2008. We were both at the Federal Home Loan Bank of Chicago, and she was let go and she ended up at LaSalle. And her job was basically, as they were getting rid of all of their mortgage-backed securities, she was packaging them out. And she knew that her job was a short time period. Like, she would be there maybe 2 years because they were getting rid of everybody. And she was able to, in that 2 years, figure out another grad program for herself and completely change the direction of her life. And she's much happier for it. So again, these are realities of working in the financial market, and we're going to just talk about them. So let's share our deck. Oof. Okay. Layoffs in the
That's good
financial
enough.
markets. Okay, so we're going to talk about it. Most of the layoffs are going to be in reaction to the economic environment. We're also going to talk about the impact of these layoffs to the cities. Specifically, we'll look at maybe New York and Chicago. This could also be said for San Francisco and other cities, and then to the actual individual. Okay, so first rumbling. We hear that JP Morgan Chase is beginning to lay off individuals for 2025. So this is one of the first rumors that have started circulating. Well, this isn't a rumor. This is an actual announcement.
Yeah.
Right. This is not a rumor. This is happening. We don't necessarily have details of what groups are going to be let go or how many. And JP Morgan Chase is just a ginormous company that has lots of different people reporting to them and working for them. So there is a vast number of people that most likely will not be impacted by these layoffs. But this is how things start to matriculate. We start with one and then they start to grow and so on. And we've been discussing, so if you've been following us for a while, we've been discussing the wonky environment that we're in at the moment. So things are unique and banks are trying to understand how that's going to impact their bottom line. And one of the best or easiest ways to help reduce costs and to help their net income and their share price is by letting individuals go. So we did a little exercise and we wanted to take a look at their monthly returns. And we can see that JP Morgan has had substantial number of time periods where we can see the decline in their stock price. And again, most banks are going to be motivated by what's actually happening with their share price. This is where they drive a substantial amount of value. And the if you've taken a corporate finance class, agency theory suggests that managers are most concerned about not the shareholders, but themselves. And one way to align those two goals is by compensating upper management with more stock options, which is one of the reasons why decisions then are going to be based on the stock price. Uh, Upper management is much more concerned about what's actually happening to the stock price as a result. Okay. Oh, we also did, this was fun. This was one of Dr. Rowe's suggestions that we put in there. This is a Google Trends map. And the expression that we looked for was bank layoffs. And what's really fun about this, and I will ask Dr. Russell Rhodes to chime in on this, what we can really see is these huge spikes. And I don't know that you can see my mouse, so let me grab a pen. We have a huge spike in 2008. We have this unique blip. I believe this is what, 2011. We have really not a lot happening during the pandemic. And now we're starting to see spikes again. And we've had different spikes in the last 3 years. And again, some of these spikes, particularly in the last 3 years, because of the pandemic, we've been fluctuating with the economics or the global economics, pardon me, of the world, and it's been difficult to know exactly where we're going to land. So again, this is the 2008 crisis. And this is when I know I personally lost my job due to the 2008 crisis. I actually lost it in 2009. No, 2010. Sorry, take that back. January of 2010. I also lost it back in, I want to say 2005. So I may have been right around here. This was at the Federal Home Loan Bank of Chicago. They were fantastic to me. I had been working there for, I think, 6 months, and they gave me 4 months of severance, which I think
Awesome.
is pretty
You know,
darn
and,
amazing.
and what's funny about that one is typically the more junior type employees are the ones that should not be concerned about when layoffs get announced, and it's because you're cheap labor. I just throw that out there. And in fact, when I was the junior most instructor at the Options Institute about 15 years ago, they announced the first layoffs at SIBO that were going to happen. And my boss just yanked me into Marty Kearney, one of the best people in the freaking world, yanked me in his office and he said, the way they do this is they have a dollar amount, and anybody that makes less than that dollar amount is safe. And he said, and I know for a fact that you're just below the dollar amount this go round. So just to let me know that I didn't need to worry that time around. Actually, I made it through all of the 3 rounds of layoffs at SIBO. Maybe I should have stuck around because the severance packages could be really, really nice. And I had been there. I was there for a decade. So I probably would have been treated fairly well if they had chosen to have me take that route. You never know what's behind it. You just know that we're not people anymore when they're making those decisions. We're numbers.
Absolutely.
It really it's and the ways to avoid getting laid off. And I'll give you a very early career example for me. I worked for a bank. I worked for a bank trust department. We bought an outside investment manager to get more deeply into the investment industry, and they basically let everyone go that was on the bank side when they did the merger, and told me I had about 2 or 3 months. And I found everything that I could do that I had been doing that nobody knew how to do, and did the best that I could at those things. And then about 2 weeks before it was supposed to be our last day and the merger was going to be complete, I just went to the head guy and I said, "Who's going to do these things?"
Mhm.
And they kept me. They just ended up keeping me.
So, and I'd like to
So that, I mean,
feedback.
that's, you can react different. I know my first reaction was I went out to lunch with a couple other guys. The same thing was happening to, and we got absolutely hammered on a Friday. And then, got it back together and made the decision that I was just going to push as hard as I could and see how it went. And that way it worked for me. It did work for me.
And you've used that more than once in your career.
Yeah.
So when you were at
Yeah.
SIBO, you, the reason why I think one of the many reasons why you did so well is you really focused on a product that people didn't understand.
When I joined the Options Institute, the VIX was just becoming a thing, and the other three instructors just really hadn't paid that much attention to it. So I tried to glom onto that one. One of my running jokes is, if you're the only person that knows how to use the copying machine, you've got some job security. I'm not saying that there weren't plenty of people at SIBO that could explain VIX, but within the Options Institute, if they needed somebody to teach a class on the product that was generating over half the revenues at the place at the time, I had created a nice niche for myself with that. That's one of my running jokes with undergrads. Find the product that's most important to your company and just glom onto that thing. I glommed onto VIX to the point of where I got introduced once as the creator of VIX. I did not create VIX. I wrote a couple of books about it, but I didn't.
Funny.
It's back there somewhere. So there. So I will hand it back to you. Enough about talking about Dr. Rhodes.
Well, but I'd like to continue on the conversation about career advice. And I don't remember, and we can look at unemployment data, but the other big is not only figuring out what's most important to your company, but being more closely tied to revenue. So if in the banking world, you've got front office, middle office, and back office. Front office are individuals who work with customers and are more closely tied to revenue. There is a lower probability of being let go the closer you are to customers. And so keep that in mind when you're starting to look for jobs. I liked being closer to risk. I liked compliance. I still like compliance, but those are what are going to be considered cost centers. And those are things that are more easily things that can be dismissed or comfortably dismissed and then rehired as needed, as opposed to your investment bankers who are actually working with clients and bringing in those fees and revenues. They're less likely to be impacted by some of these layoffs. Uh,
You
So we,
One of the things I was going to say with respect to, and this is something that I've seen in my career with the middle management, older folks, and I see it teaching, the working people that are doing their MBAs at night, where technology starts to get past them.
mm,
And they have a hard time. In fact, I just did a panel at the conference I was at last week for college students, and it was all about the emergence of technology in the financial industry and how you keep up with it. My method of trying to keep up with it was I went back to school and went to IIT, where you went. That was probably our first commonality. And this was over 20 years ago, but did a financial programming certificate at IIT, or Illinois Tech. to try and keep up with that. If you look at some of the comments that JP Morgan made with respect to what they're looking at, I know Jamie Dimon's been all over the place saying, if you work from home, you got to come back in the office, blah, blah. That's his big, yeah. Uh, but if you start to dig into some of the other things that they've said with respect to this, they believe that they're with the implementation of AI and a lot of the data work that they do, that they can increase the efficiency by 20%. And that looks like and that's a cost center, and that looks
Mhm.
like an area that they're going to be targeting for this. And that goes
Sure.
right along with what you were saying with respect to cost center versus versus being a revenue producing. And then also customer facing is a very, very big deal
Yeah, and
as
something
far as
that's
security goes.
absolutely, and we have to remember, particularly in the financial markets, it's still a relationship business. It is about people interacting with each other. There is obviously algorithmic trading. There's different things that are very focused on you could develop systems and never talk to somebody, but it is still very much a relationship business.
Absolutely.
And I'd like to, speaking of relationships, I'd like to do a quick shout out to Ben Van Fleet. He is a professor over Illinois Institute of Technology that we both had. And I'll make a small pitch for him if that's okay with you, Dr. Rowe.
Certainly.
I When I started the program with him, I had never programmed anything in my life. And within 9 months, I took 3 classes with him because it was a quarter system. I was able to develop a fully automated trading system, being able to connect into it in exchange, which I think is pretty awesome, given again 9 months and taking somebody who's never programmed. Now, I would politely ask that you not ask me about any of those connections or how to do any of that now, because it's been over 20 years.
And
But
it was also languages that are not used anymore. And this is part of the keeping up.
mhm.
It was C and VB.net. And I
Yep,
think Ben's book was
VB.net
on
and C++.
VB.net.
Yep,
Now I'm using R, Python, and VB with an Excel for some of the easier stuff. Uh,
right,
and I one of the and I feel like I'm deviating maybe a little too much, but I get asked, how do you know what you should be paying attention to as far as technology goes? There's a website called dice.com that is all IT recruiting. And if you go to dice.com, you type in like trading Chicago. And of course, I'm doing that right now. Trading Chicago. Come on, location. Uh, what you'll do is you'll actually see, what languages are needed. What are people looking for here? There's a C++, but that's when people there's an ST, there's using SAP. But when people ask, well, where should I look if I want to increase my technology skills? I would say R. There continue to be a lot of jobs open that are asking for R, and Python would be the other one as well. But I'm just kind of scrolling through jobs now. If I had done this 30 years ago, again, it would have been C and VB.net,
right,
and maybe some Excel macro stuff. But just what people are looking for hiring wise, those are the skills that, if you're thinking about doing something to enhance your skills, that is most definitely something to do right there.
right.
Yeah, these are all C++, a lot of C++ stuff. Many
So,
people have been using the easier language, so they're having trouble filling those things. You're gonna go back and learn C again?
no.
I didn't think so. All right.
No, and so a big difference between like C and like a Python or R. C is a low-level language, so you're developing quite a bit of it, versus R or Python has nice little packages, and so there it's better used for scripting and more fun things like that.
And you really don't even have to know how to program in Python or R if you just go to AI.
Which is
Really, I mean, there's a
exactly
little,
Jamie
I'm
Dimon's comment.
oversimplifying it, but you can do
Yeah.
that. Yeah. So,
And so we looked at the historical trends or the Google trends for, and these again are words that are searched by Google. This is the actual unemployment data from the St. Louis Federal Reserve, the Fred data source. And we can see that in 2008, we can, and this is again where I was laid off in January of 2010. So we can see the unemployment really just spike. What this doesn't tease out right here is this is just general unemployment. So in the banking industry, we don't have that big spike in 2020 in the banking industry compared to what we had in the overall industry or the overall economy, pardon me. And we can see that we're starting to trend upwards again, and we'll see how that impacts the overall one economy, but banking industry. And we can tell, or we can't, we just happen to know from institutional knowledge that quite in the 2008 financial bubble, we had a dramatic impact in the financial markets. And if you remember, this was the time when we had protests against Wall Street, and there's a lot going on politically as well.
So
So we've got this.
I had a kid in an interview tell me that he had camped out with the Occupy Wall Street stuff. If you did that, don't tell people when you're interviewing. Go ahead.
No. No.
I couldn't believe he told. Oh yeah, no, I know where your place is. I was camped out when I asked him if he knew how to get to the exchange. Yeah, I was camped out there for 3 weeks.
Right, right, right.
I couldn't cancel the interview at that point. Okay.
And that's the last thing we're going to look at is the impact on New York City. So I was trying to find an actual article that supported this, but in 2009, the economy had gotten so bad in New York City because of the amount of layoffs from the financial markets that New York City was unable to meet its payroll. Because if you think where revenues come for the city of New York, a lot of it is tax revenue. Well, the financial markets are so important because the people who work in the financial markets make a premium and therefore they have a higher tax bill. So they're the ones proportionally paying more out to the people of New York City. And so New York City struggled meeting payroll for their teachers and the police department. So the impact of layoffs in the financial market are much broader than you might initially think. You might be thinking, oh, these traders are, they're going to lose their jobs. It's not that big of a deal. No, it's a ripple effect.
So,
It's systemic risk that we're looking at when we start to see some of these things fall apart. And that is it for what we have for our presentation on layoffs. I do again hope that anybody who is possibly going through this, or if you're a student and you're contemplating the financial markets, that you're not deterred and that things will turn around and bump up. And if you're looking for some just general advice, keeping up on technology and being closer to the revenue source is going to be better for you for when layoffs do happen. And for you to be associated with those niche products that other people just don't know. Dr.
that's
Rowe, any
definitely. Well, I
final
was
comment?
gonna a couple. But I'm actually trying to find the unemployment rate in Chicago. You know, and it did almost the exact same thing back in 2020, spiked up to almost 20. But it's relatively high right now. And the reason I'm bringing it up is just, uh, you and I've been to industry events in the Chicago for years and years and years. It seems like everybody, those industry events have all moved down to South Florida. And there was a monthly happy hour thing I used to go to that would draw 50 to 100 people here. The last one I went to had 12.
Yeah.
And I was one of the youngest people. So, the fact a lot of people have been able to work fully remote. Citadel moved themselves down to Florida, and I think a lot of related firms probably moved down there as well. Um, so that's just something to keep in mind as well. Is that the when the financial industry goes through these things, it's not just New York. Chicago gets hit in a bad way as well, and we've already got enough problems here in Chicago without the high earners moving out. You can't, if everybody moves out, you can't tax anybody. Then you got a lot of problems. So
Yeah, at Peak
there's
Six,
a
we've
happy
got that.
balance. There's a
Yep,
happy
it's
balance between I don't know, not overtaxing rich people and taxing rich people, because
there's
ours is
in
overtaxing.
economics, there's what's called the Lafayette curve.
Yeah.
It actually examines just that. And I was going to say Peak Six also moved down to Texas. So lots of
Well,
the bigger
well,
names are,
and half the option industry council is in suburban Dallas now.
yep.
So the New York Stock Exchange bought the Chicago Stock Exchange, and they're moving it to Texas. Yeah, there you go.
They
Boston
have,
Stock, but the Boston Options Exchange is one floor down from SIBO over on LaSalle. So
okay.
the names don't mean anything anymore.
No.
All right. With that, I will take us out because I always make you do all the work on that one. If you appreciated some of our advice on a difficult topic here, please give us a thumbs up. Feel free to subscribe. If you got any comments on what we said, feel free to. We love constructive criticism. We're used to non-constructive criticism periodically as well. We can deal with it to a certain point. Just Larissa's kids read these things. Be nice.
Yeah.
So there. So with all of that, thanks for joining us. I have this funny feeling that Lafleur curve is next, and
Yeah.
we will talk to you about that fairly soon. Thanks a lot.
Thanks.